Hi traders, this is Adam House, Senior Account Manager with Forex Capital Trading, hosting just a quick webinar on setting entry orders around economic events. This webinar will go for approximately 10 to 15 minutes, and we'll just look at setting an entry order as opposed to a market order. Market order is when you're in the market right away. Obviously, an entry order is an order waiting to be fired in the market. Just a short general advice warning before we begin. Forex trading involves trading risk capital. The following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your personal needs or circumstances. Okay, so the first thing we're going to have a look at is the actual economic events that are happening on the market. Now, as we know, the Forex market is a barometer for a lot of economic and political social activity on the market, but particularly a lot of focal point revolves around high impact announcements. Because a nation's currency is so directly tied to the central bank of that respective country, the market really sort of trains aside to look at economic events coming out relating to GDP, also employment, and very importantly, interest rates, because obviously the interest rate attached to a currency largely determines its value. So to really make effectual use of this strategy, what you need to do firstly is have a look at the up and coming economic announcements for any given day. So what we'll have a look at is obviously the economic calendar, the third button down on the right hand side on your platform. And then what we'll do is we'll go into filters. We're going to scroll down and select 3 bars, and that means high impact. Okay, we're not concerned with low impact. Low impacts relate to, for example, NEB or Westpac consumer confidence. Okay, they don't move the market that much, but high impact announcements do. So we're just going to click on apply, and then we'll go to a weekly outlook. And then the last step in the process is always select your time zone, okay? Because obviously these announcements are happening with respect to the market hours overseas, okay, in the London and the UK market and in the US market. Now, obviously that'll be, in the evening and into early morning our time if you're in Melbourne or elsewhere, so in Australia. So we need to select our respective time zones. So go to for us, it's Melbourne, and you select plus 10 hours. Then what you've got is basically a kind of like a high impact schedule for announcements coming out this week. As we can see, coming up on Monday, earlier in the week, it's a little bit quiet this week, but coming up to Thursday, we've got, a host of economic announcements relating to crude oil inventories at 12:30 on the US. We've got the RBNZ interest rate decision, tipped to hold rates at 1.75%, and then a short statement afterwards about economic outlook provided by the RBNZ Governor Wheeler. Coming up to the GBP at 6:30 Melbourne time for manufacturing production, followed closely by PPI. That's a price index for manufacturing at 22:30 hours for the US dollar. And then we've got core CPI happening on at 22:30 on Friday for the US dollar. Now that CPI is actually a very important figure as well. Inflation is a very important figure to watch out for. But I guess in retrospect, what I'll do is an educational sort of an example on this webinar is we'll have a look at last week, because we had a very important announcement last week on the NFP, non-farm payroll. Here we are. Okay, so on Friday of last week, August 4th at 22:30 hours, we had the non-farm payroll for the US dollar. And non-farm payroll is an employment measure in the US that measures change in employment, or number of jobs created rather, sorry. And that's excluding excluding the farm and also the non-profit sector. The actual forecast for non-farm payroll was 183,000 jobs created. And in actual fact, better than expected job numbers actually happened. Okay, they expected a forecast 183, and we got a result of 209. Now, when you get figures like that, better than expected numbers, particularly on employment, GDP, inflation, interest rates, that sort of thing, generally it's taken as bullish for the currency. The reason being is that if you get higher than expected job numbers on the non-farm or bigger employment being created, then that's seen as quite bullish for gross domestic product or economic growth, in other words, for that country, which is likely to stem investor confidence in that particular currency and that nation, because obviously the output could be greater. And if the output's greater, then there's a higher likelihood of increased inflation and increased interest rates attached to a currency. So we've got a result last week where 209 jobs were created, better than expected forecast of 183. So let's just have a look at the chart of what happened actually on the US dollar Japanese yen. And we'll have a quick look going back to an hourly time frame here. And what we'll see on an hourly chart, and these are all hourly candles, is as expected at 22.30, we had a big bullish spike on the USD Japanese yen. So at 22.30 hours, the price was hovering at 110.10 just here. As soon as that announcement came out with better than expected job numbers, the price on the US shot up against the yen to 110.70 and eventually made a top at around about 111. And that's a 90 pip gain in the market. So quite a significant rise on that particular pair. Now, you might be asking, how do I know what the actual result's going to be on an announcement? No one ultimately knows for sure what the announcement will be and what the effect of the market will be. Generally speaking, if you get better than expected news on employment, GDP, also if you get better than expected announcements or rises in interest rates, it's usually taken as bullish for the currency. But bear in mind, there's a lot of players in the market, a lot of entry orders and so forth and so on. And bear in mind that no one actually knows what the result will be, particularly with NFP. So one of the ways that we can actually go about, combating that is to have a look at an entry order strategy, okay? And an entry order is different from a market order in the way that you set the entry order to trigger when a certain rate has been reached. So let's take, for example, the economic outlook for today. And let's have a look at the economic calendar for tomorrow. Remember, it's high impact announcements that we're looking at, okay? And we're going to have a look at the correct time zone first, which is here. Have a look at this week. Okay, so we've got coming up at 7 o'clock in the morning on Thursday, August 10th, we've got the Reserve Bank of New Zealand interest rate decision tipped to leave rates on hold at 1.75%. Now, usually when a nation leaves its interest rates on hold pertaining to its currency, it's usually taken as bullish for the actual respective currency, and if they raise rates, then it's usually taken as quite bullish. These rates have been on hold for quite a while, but they are still comparatively high to most other nations. But ultimately, we don't know, okay, with absolute certainty which way the market will go. So if we were to trade that announcement at 7 o'clock in the morning, what we would do is we'd actually find that respective pair, the AUD NZD, which I don't have added to the platform at the moment. So I'll add that pair. AUD NZD. Now, bear in mind, you don't have to trade the AUD NZD. You could trade the NZD USD. Okay, so long as it's NZD correlated, because that's the currency that's actually going to move. So let's take the NZD USD for example. We'll type in the chart NZD USD. Sorry. There we go. Okay, and this is the price 1 hour chart for the NZD USD at the moment. Now, let's just fast forward and let's pretend that it's just coming up to maybe 7 o'clock in the morning Thursday right now. Okay, even it's Tuesday now, but let's pretend we're coming up to Thursday, 7 o'clock. And the price was 73.54 at this point in time. What we could look at doing is after we've analysed the market and we decide that, the market's going to respond in a particular fashion, but we're unsure, maybe we want a certain rate to be achieved before we enter into a trade. And say that under all the circumstances where we've done our analysis and had a look at the market, we expect the New Zealand dollar to be bullish against the US dollar after the announcement comes out because they've left rates on hold at 1.75%. What we could do in that instance is rather than placing a buy order now with the uncertainty of what's going to happen, we could actually place what's called an entry order on the system. And we could have a look at the current price where it is now at 73.54. And then we could actually look at a slightly higher rate to come into the trade, because if the market moves to the upside and moves to this area here, it's most likely going to continue on that announcement under normal conditions. So under these circumstances, what you could do is you could set an entry order 10 to 20 pips above the price at the moment, okay, where it is at 73.54. So technically we could set a pending order to come into the market 20 pips above the price at 73.74. So we find our respective pair on the New Zealand dollar, US dollar. And we would click on buy. The current price is actually 73.58, and that's on the buy price. So just prior to the announcement, what we could do is, rather than select a market order, select entry order. And then we could type in a rate at 0.7378. Now that is currently an order rate of 20 pips above the buy price at the moment, approximately 20 pips above the buy price. So what this means is that if we execute this order, we will not be in the market until such time as the rate of the New Zealand US achieves 73.78. And if the market reacts in a huge upswing to that announcement and triggers the order, then it should be enough to actually capitalize on the right entry point and further upside as the price continues to travel upwards. Now, of course, what we can do with these entry orders, we can set a stop loss and take profit on our trade. And remember, these stop losses and take profits pertain to the entry rate, not the current rate, okay, the entry rate. So if we come in at 73.78, what we could potentially do is put in a stop loss of 73.50 below the entry of 73.78 here, and then a take profit of 0.7450. So what that means is if the market does respond bullishly to that announcement, it will trigger 73.78, at which time this will be a live order in the market with a stop loss of 73.50 and a take profit of 74.50. Now, if the price keeps rallying upwards to 74.50, it will trigger the take profit and take our profit. But if for whatever reason we see a massive upswing, and sometimes it will happen, not often, but sometimes if the price does retrace quickly, it will trip our stop loss at 73.50. So we'll click OK on that. And then we're in the system, okay? And this is a live account. I can't trade on the live account, unfortunately. But when you place the entry order, it will actually be waiting to be fired down the bottom here under entry orders. So to give you a better idea of that, let me log into my demo account, and we'll try doing the same on the demo account. Okay, so yet again, we're going to find the New Zealand USD pair. Just down here, we'll click on buy, select entry order. The order rate was 0.7378, which is 20 pips above, now 22 pips above the buy price. Going to select stop loss and take profit. Going to put our stop loss at 0.7350. Take profit at 0.7450. So what this means is if the order rate is triggered, we have a stop loss on the trade live at 73.50 and a take profit at 74.50. Click OK. We're in the market. And as you'll notice down the bottom here under entry orders, we've got a buy position for the amount of 10,000 on New Zealand US dollar waiting to be triggered at 73.78. If it does, if the market rate gets up to here, it'll trigger with a stop loss here of 73.50 and a take profit of 74.50. So you can use this sort of strategy on all sorts of announcements in the market. We've got a hell of a lot of data coming up every week with respect to different currencies. Most of them are USD correlated. Okay, so the US has a lot of data coming out quite frequently. You get some really big moves on interest rate announcements in the market. And usually, sometimes, more often than not, they create very, very big spikes in the market of around about 100 to 200 pips. So you can definitely capitalize on some really good entry points on those sort of trades. hopefully it's given you a little bit of insight into what an entry order is and how to start placing them. The key homework you have to do obviously is researching the economic announcements at the start of the week, and you've got to be pretty critical with your timing around the time of the actual announcement. I mean, you wouldn't want to set an entry order 12 hours prior to the announcement because obviously the price may move in the meantime. You want to be doing this, around about half an hour or less prior to the announcement to capitalise on some good swings in the market. But if you need any points clarified on those individual trade setups, please contact myself or your respective account manager, and we'll go through them with you and place some live trades with you on the entry orders. In the meantime, thanks very much for your attendance. I appreciate your time, and we look forward to seeing you at the next webinar. Thank you.